Unlock the high returns of the expanding venture capital world right here on the Emerging Managers Podcast.
God, it's so fun to hear Brian Mac Mahon, Expert DOJO. I mean, I've been in his space, I've been to his events, and I love hearing him talk so passionately about everything they're investing in.
Yeah, he's a crazy workaholic Irishman. And, as a fellow Irishman, I can really appreciate what he's doing. The things that he does are mind-boggling. The volume of companies, the volume of countries that he's, getting involved in. They're going to be launching, a fund in India. They have investments in Africa. And the reality is now he's really making this focus on growth hacking because, at the end of the day, putting money in a company is maybe solves one problem, but it doesn't solve the rest of the problems. And now he's leaning in to this growth hacking strategy for his companies, which I think is phenomenal.
But, more than that, I think I'm just astounded. I mean, I've known of Expert DOJO. We've been to events at there. I pitched at one of your VC Fast Pitch there, but I've also done some Inc. innovation interviews there and other events as well. But they have had over 300 startup investments. That's just crazy numbers. I just, I had no idea how big they had gotten.
Yep. Yeah, and actually, he's invested in 2 companies, actually more than that, 3 or 4 companies for direct result of the VC Fast Pitch. So,
yeah, amazing. Well, let's hear from Brian Mac Mahon, Expert DOJO.
Hello, everybody. My name is Scott Kelly. I am the founder and CEO of Black Dog Venture Partners and your host of the Emerging Managers Podcast from sunny St. Petersburg, Florida. And I'm glad to be talking to my good friend on the other coast, Brian Mac Mahon of Expert DOJO. Brian, welcome to the show.
Thank you, Scott. It's always great. You and me have been friends for a long time, but it's always great to chat.
Fantastic. So obviously, we're going to get into Expert DOJO, what you're doing now, what you're doing in the future, but share with the audience a little bit about your background. What did you do before Expert DOJO?
I'm an old man. So for years, I've traveled around the world in different guises. I had my own startup. I've invested as an angel. I had a property development company. I worked with one of the largest disruptors in real estate, which was Regus. And then I worked with one of the largest disruptors in finance, which was Christie's back in the day. So very wide experience, lived in the UK, in Norway, in Sweden, in Finland, in Denmark, in China, and Russia, and Mexico, like tons of places around the US, like Houston and Austin and not Miami, actually, Dallas, Boston, everywhere. So probably 30 countries and God knows how many cities. And so I would say my worldly aged experience is vast.
That's awesome. So talk about Expert DOJO. Obviously, you've got a really unique thesis and a really unique philosophy on how you work with startups. So talk about how you invest, why you invest, and what do you do after you invest?
It's very interesting because I've been doing this now for 10 years. And when I say doing this, Expert DOJO started off as a venture studio and a growth hacking firm. And then it evolved around 6 years or so ago into a pure venture capital firm. So I've been a venture capitalist for 6 years and then probably another 3 or 4 years on top of that, in the world of venture capital and almost trading paid services for equity for services and then equity for investment. And so if you'd have said to me at the very beginning, maybe 10 years ago, I would have said to you, venture capital is the greatest thing in the whole world because there used to be only 10 or 12 unicorns in the world 20 years ago, and now there's 1,200. Look at the opportunity. And the value of companies, the biggest companies in the world, maybe 40, 60 years ago was 20 billion. And now look at it, it's like 2 trillion. And so everything suggests that if only we could get like 5 or 10% in a company that could turn into an NVIDIA in the future, or even turn into half an NVIDIA, literally you're getting $100 billion. It's not even life-changing wealth anymore. It's a country, an entire country's wealth that you get. So I would have said, even back then, I would have said, wow, this is amazing. What I would say today is there's a lot of VCs. There's a lot of VCs. There's a lot of people allocating. There's a lot of startups. And what comes with 1,200 unicorns, which are private companies valued at over $1 billion, is 1 million startups. And so when you're going through a million startups, even hitting the old numbers of, well, I just need to get 1 in 20 to make it, and I'll be able to repay my fund and probably get like 1 times over. Even that becomes more difficult because there's so much noise. It's so easy to build a startup. The barriers to entry are so low and everybody is so damn optimistic. And the other inherent problem that I've realized just within venture itself is that everything is made up at the beginning. So a venture capitalist in a normal firm has to pay 5 to 10 times the value of a company in the hope, maybe 20 times, in the hope that that company will be worth 100 times more. And what do I mean by that? Like a normal seed valuation might be 5 million, 6 million, 7 million, 8 million. Well, no, they're not worth 5, 6, 7, 8 million. That's like all made up. Like even their mom is not going to pay $500,000, never mind 5 million, right? And so it's this really weird, strange, made up game with ridiculous outcomes at the end if you choose the right company. But the goal is to like be a Steve Jobs or a Bill Gates or even a Steve Ballmer who comes in at the very beginning, who has that equity, and then say, we picked the right company, it was Microsoft, and now my stocks and shares are worth $20 billion. Like, so wonderful, but challenging.
So talk a little bit more about your philosophy. I want you to, first of all, talk to entrepreneurs first, and then we want to talk to LPs or potential LPs. So let's, from the entrepreneur standpoint, talk about the growth hacking side and what you're doing there. Because again, a lot of venture capital funds put money in and frankly do little else. Maybe they go to a quarterly board meeting or they, introduce them to some 1 or 2 people. Talk about kind of your value add at Expert DOJO.
So I think my journey came from a very pure place at the beginning. I think like history judges how pure that stays in the long term, but I think it came from a very pure space at the start. The more I watched the entrepreneurs who were winning, the more I realized that associated with 70, 80% of those were tremendous sums of money being put in by very large investors who we could argue were manipulating the game. And so what do I mean by that? Like take, what was that audio service back in COVID that came out? Was it where they were creating all these rooms that we would go to and do VIPs to go in there, and they'd
yes,
do well for a
I
while.
just went blank out. Yeah, it flamed out like as fast as it exploded.
Went boom, boom. And because Andreessen put $10 million in right at the very
Right.
start, and then they put $100 million in at $1 billion valuation. And in Andreessen's mind, like for most normal people, this would seem absolute insanity. I mean, it was a very early stage startup. They didn't have any revenue. They did have a good model for being able to drive people in. It was really good for COVID. But as soon as COVID went, then nobody wanted to be in audio rooms anymore. Everybody went straight back. And also Twitter copied it, Instagram copied it, everybody copied it. Like they got slaughtered. But what was really interesting was it was exactly the same tactic as they tried to do with WeWork, which is that if we just put $1 billion or $2 billion into this, we can uncompetitively force everybody else out of the game. And I saw this and I was like, oh man, this is like bad. And it's not even just that everybody looks the same and is the same color and is the same gender and goes to the same school and mommy and daddy all work for the same venture capital firms. Like that's bad enough. But actually it's just terrible for America. Like it's just awful because what happens is amazing innovation. It just goes elsewhere because really incredible executors who are like, I can't compete with $100 million being put in. They're just going to force me out. They're going to take my people. Like I could compete with a Series A 10 years ago, it's $3 million. That's fine. But $100 million is too much. So I thought to myself, there has to be a different path. And so the venture capitalists are not the enemy, by the way. It's not Andreessen or anybody else. The enemy is the quantities of money that is available to distort the entire game. Like I'm down with a bit of unfairness. I think if I work harder than the guy or gal next door, like my kids should have a little bit of a break against their kids because I worked harder. Like it was my work that got there, but it shouldn't be so stupidly different that literally my kid doesn't even need to have a brain, right? And so that's where we were going to. And so I thought to myself, well, if we have to combat this, if the enemy are the quantities of money that are out there, then what is the epic insight that will actually help overthrow that enemy? Well, it's the customer themselves, because the only person who very seldom lies is the customer. The customer knows whether they like something or whether they don't like something. The customer decides whether they go back to the bar the next night with their friends or whether they go to a different bar. The customer always tells the truth. So by saying to startups, look, right now you're spending 70% of your time raising money and you're really playing a losing game. But imagine if you spend 70% of your time on your customer. I mean, obsessing. And even like terms in Silicon Valley, like minimum viable product, they speak to the arrogance of not caring about the customer. It's like, here's what we're going to do. We're going to give you something really shitty at the beginning, but it would be super cool if you could like give us loads of feedback so it can be less shitty afterwards, because then we're going to have real customers that are going to be valuable to us. But would you mind doing that for us? Like, it's a crazy developer term. And so we started like working on concepts like lovable product, and started really, amplifying that by saying to people, have you ever gone on a minimum viable date? Or have you ever had minimum viable sex? Anyway, there we go. Here comes the Irish out
That
of me.
could be a whole new
It's
conversation
all
for another
over
podcast.
now. I just took the podcast in a whole different direction. But like, it has to be love. Like, it's got to be love all the way through, or it doesn't work. And so we thought, what if we obsessed on the customer in a crazy way? What if we obsessed on the messaging, obsessed on the lovable product, obsessed on the outreach, obsessed in every area? And what if we were to bring in loads of growth hackers who could do the same thing? And then what if we just really started working on startups and even on the placebo effect at the beginning when we were just okay at this and said, look, work on this, become amazing at this, turn them into raving fans, and then use that to attack your competitors who are probably have no emotional empathy, no emotional resonance, no user empathy, none of those things. Like, attack them with your tools. And so, yeah, folks liked the message. And I think, look, at the beginning, we were mediocre to okay. We then started bringing more and more people in. We then started struggling with like things like, how do you scale something like this, even if we have really good people? And we've kind of worked our way through this. And today we now have these full audits that we do on companies where we will actually give what we call a probable unicorn score, which looks at their percentage growth the year before. It will look at their probability for growth using 7 characteristics: outbound, systems, conversion, and peak performance is one of them, actually. We have investment as one of them as well, livable product as well, and a few of the things as well. And then we will look at like how long to get to $100 million valuation, as well as what the valuation increase is, and we just build a score. And then we're building out, I don't want to say it's perfect, but it's definitely getting there. And we're building out this like mini university of growth, whereby people can then go in and say, hey, we need to get our email better. Wonderful. This incredible email person has actually got an incredible course here. Oh, we need to do like LinkedIn outreach. Awesome. We have it here. And so that's the idea behind it. Like, we build that in. So look, whether we are the change makers in startup, there is no doubt in my mind that customers are the change makers for venture backable. So I couldn't be happy with how it's kind of begun and continued to today.
No, that's incredible because, the reality is, you and I both know the vast majority of these startups should never even pursue raising capital or venture capital.
Yeah.
They should just go out there and build a business and sell their product or service. And it was really interesting. As you were saying, this whole concept of the MVP being arrogant. I went out to dinner at a restaurant last week. The food was terrible, but they wanted to invite me back. I go, no, get the food right the first time, then I'll come back. So it's really interesting how you're adding more value and more real value outside of just the money. And I appreciate that. So obviously you've got a vast portfolio of companies and you've been growth hacking with them for a long period of time, on some for a shorter period of time. Share some of the success stories in the portfolio. Tell me some of the winners or some of the companies that are doing great things.
So, first of all, shall I give the model first, just so you can see how early we get them in? And then you understand. Yeah. So, look, I'm a great believer that none of us should ever copy other people, because then we just become a little mini me. But we should definitely take the best of what we see in the market and then model our service on that. And I would say that to like any GP who's coming out. Like, don't just think that you're a good angel and suddenly you can become a good venture capitalist. Like, there's a lot of folks who've done this for a long time. And there are certain people who do diligence really well, and other people who'll do analysts really well, and other people who'll be able to like manage their portfolio well, and other people who have models. My favorite model in the private space is Y Combinator. I think they just nailed it. I actually it's so interesting because they don't share any of their financials because they don't need to, but they are probably the most successful, if not top 0.00001% most successful financial models that exist in the world for anything. They have to be. They have 100 unicorns. They buy in at like a $2 million valuation on the companies. They get 6 or 7% of the companies for that. And then they take them all the way to the end. And when you get a unicorn, you get a Coinbase, which is $100 billion. Even if they're 5 or 6 or 7%, even if it diluted down to 2%, that's still $2 billion that they bring through. Now, that contrasts with other VCs who might invest into the company at $10 million at a standard seed round, especially as we were hitting 2021. And a lot of the seeds in San Francisco are like 10, 15, $20 million. Well, even if that company hits a $2 billion valuation, you'll lose 50% of it because of dilution. So let's even say you're 20 million. You know what? A 2 billion isn't even an average valuation. Let's say even 200 million, which is average. It's only a 10 times. And it's only really a 5 times because you had to get diluted all the way down. And it might have even got diluted down by more than that. So for a standard VC, it's just really tough. With Y Combinator, if they're coming in at a 2 million valuation, then if they hit the $200 million, they get 100. Like, that's my view. Sure. And I'm like, super, this is cool. So Y Combinator are cheap. I'm Irish, so I'm naturally cheap as well. And so there's like a direct alignment on this just right at the beginning. Before I didn't even look at the outcome. I'm like, this is great. And so I thought, wonderful. Now, Y Combinator get away with what they get away with because their brand is so good. And what they said, look, we're not really going to help you, but there's so many VCs who are just licking our boots that if you come in, you have a 2% chance of building a unicorn, right? That's how they got their 100 unicorns they brought through. And people are okay with that. We just do the same thing. We just do it with growth. So what we say is, look, if you're in the camp of, I want to raise as much money as I can so I buy a unicorn, you go to Y Combinator. But they're great. There's no disrespect meant with that at all. Nothing but respect. But if you want to go into a camp where you want to be obsessive about your customer to the extent that they might take a restraining order out against you, like, you come with us because our belief is that if you do that well enough, then you're going to be able to come out the other side and like raise a ton of money. And like, case in point, one of my favorite companies of the last like 6 months or so is Credit, Kredete. And what Credit do is they send money to diaspora using it from diaspora to Africa, using a thing called the Lightning Network, which is an awesome blockchain. I still think, like, within crypto and blockchain, the only real application that's out there today is for decentralized finance. And so they're building decentralized finance, and we help them with their brand and we help them with their messaging. And if we had longer, I'd kind of go into what we did about that. But they came out with incredible messaging that galvanized an entire population around them. And because they could send money over faster and cheaper and quicker and do it better, their revenue went from 10, 20K a month up to almost $1 million a month in very, very little time. And so, of course, they had no problem raising tens of millions of dollars, like zero problem. They got to choose who their investors were. They actually got to turn down one of the biggest investors in the world, who everybody knows only because they didn't believe that investor would add enough value to growing their audience. How cool is that, right?
That's awesome.
So when we get in on a company like this, and that company hits that type of valuation, then we know it's only a stone's throw from getting up to the next level, which is a couple of $100 million and then $1 billion. And then we go and we take over all of Africa for financial services. And I love it because, like, we had to, whenever we're doing these things, we help them build an enemy. And at the beginning, the enemy was Western Union, and it was about Western Union, the evil ogre. But then the enemy became, it's not us. Like, for 1,000 years, it's not been us. And that's not okay. This is us. And I may be sitting here like a white Irish guy talking about us, but the founders of the company, the other investors in the company, the employees of the company, they are us. So they're able to like build this incredible solution, which is joining the diaspora with all of Africa to build what will be one of the most sophisticated financial institutions on that continent. So super cool. And maybe we have like Gesture doing amazing as well. Gesture did $25 million in revenue last year. I think we invested in them about 2.5 years ago. And this year they're on track. They did 5 or 6 million in January. They'll probably do 7 to 10 in February. Like, this year they're on track for somewhere between 50 to 100. You know how much money they raised?
How much?
$3 million. You know how much money Credit raised? Maybe $3 or $4 million. Clinexus, who are in the healthcare space. And Gesture is like an amazing app to help brands be able to get directly out to the consumers that they want to be able to connect with. It started out as a gifting app and then turned into this phenomenal marketing, MarTech. I call it relationship tech with customers, but like really cool. Our Clinexus, who will hit 20 million in revenue this year in the healthcare space, building out healthcare programs for local providers. And they raised 1 million, 1.5 million. And so they're my people. Like, I know my people. My people are incredibly executing entrepreneurs who have a deep experience and passion and ability and execution ability to be able to build something out to then take it through to the next level. And look, you and I know once companies start hitting $50, $100 million in revenue, then you're touching the $1 billion valuation and then.
So obviously you've been doing this both in the US and abroad, but you're building a new flag in a new country. So maybe we could share a little bit about what you're doing in India.
We've invested now in over 300 companies. And we did that in a 6-year period. It was a brutal expansion. Like, we're here in Santa Monica, over in our offices here, which you know really well. And we've done like amazing Black Dog events down here at the other end of the hall back in the day. And we'll do one this year. Even if I end up having these pods in here, we'll still do something with Black Dog. But like, as we evolved and we went through those companies, I would say we probably have about 15 companies like the one I just mentioned there. And then we have probably 30 to 40 that, man, anything could happen. Like, they're going here and here and here and here and here. And they're early, they're a little bit later, but then anything can happen on them. And then there's probably 100 companies that aren't really going anywhere. And then probably 100 and plus, which are in the middle, right? And so I'm really happy with the way the portfolio has been put together, but I also know that I can't scale me. It's ridiculous that I'm heading, with a great team, but still heading. Like, I run our growth hacking. So it's ridiculous that I'm heading growth hacking for this amount of companies, because I start to become a massively diminishing resource. So there was a few things that we decided on the journey. The first thing is the real essence of what our model is. Our model isn't even really the buy cheap. Our model is combining the best in public markets with the best in private markets. Best in private markets for me was Y Combinator. Best in public markets is what a JP Morgan or anybody else would do with options. We love options. And Silicon Valley Bank played with them for a little while, but we play with them on a whole different level. Because what we say to these companies is, look, guys, if we're going to work with you for 4 years, then we want an ability to be able to invest at a severely discounted rate in the future, but not discounted away from where you are today, because we're working with you starting from now. And as a repayment for that, you can take as little as you want from us at the beginning. You don't have to take like 100,000 for 6 or 7%. You can take less. And so people really liked that. And at the beginning, folks would say, well, what if my value is at like $50 million and then you can do $1 million at a 10 million valuation? I'd say I'd be disappointed. I want you valued at $300 million. And look, and if you're wondering, and that means we get a little bit rich, but you get really rich, like, it's a big win. And look, maybe I can't convince you, but put your wife or husband on the phone. Let's see how this aligns with them.
Yeah.
And so
exactly.
it's really different. Nobody had done this before, and it's working really, really well for us. So that whole piece of buy cheap, add obsessive value, and then buy cheaper than anybody else can buy at the seed stroke Series A. That's our entire model that goes to LPs. And then the other thing was the decentralization. I was like, I'm done. Like, me doing this centrally is just stupid. So now what I'm doing is I'm bringing in licenses all around the world and saying, look, we have this model which quantifies the weaknesses within startups to be able to build unicorns. We then have the sales training program, which starts with a cohort program and then goes into a portfolio program, which will continue to monitor and mark against the scores of these unicorns, so you can properly not run the management of your portfolio, because anybody can do that. There's 100 systems for that, but actually manage the growth of your portfolio, which is really where your juice is at the end. And so we've done our first one in India, which Ash is doing over in India. We've launched the Indian fund, which would be a $10 million fund. Ash will raise that over in India. We'll do about 60 companies, which we'll bring into the accelerator. We'll do 5 to 6 warrants, which we'll do on the back end, maybe 4. And then the rest will be maybe $1 million of opportunity money, that we call it. And so that's in India. I think if anybody has not been looking at India, you should. It's going to be like, it's no coincidence that President Trump is cozying up with the Indian Prime Minister, like really tightly, and he doesn't give a shit about anybody else. Well, yeah, can I say that? I think I can say that. Anyway, so India's awesome. Be really close to India because it's all happening there. And the other thing is we also launched a celebrity fund in Miami, just 'cause it's fun and because it's really interesting with LPs. I would like to think that the only reason LPs, limited partners, make any decisions to do investments into a fund is because they like the potential financial outcome, and they like the fact that the GPs have more experience, and they like the thesis of the fund. But unfortunately, in my skeptical old age, what I have found out is that actually just a lot of folks like going to parties with people who are famous, right? And shock, horror, and it's really disappointing in life, but it's a thing. So we have a celebrity fund, and the same thing goes on. I can justify it to me, as abhorrent as it is, because on the celebrity side of it, they can add real growth onto our startups. And so I like it for that reason. So we brought in some incredible celebrities, NFL players, NBA players. We've got MMAs folks, like a ton of Formula One people, like really great celebrities. And the idea is we attach products and services and tech, and we let these things fly. Or we bring in celebrities, whether it be a Kim Kardashian or somebody else, and we say, look, if you have a product that you want to push out there, we'll do it. And then limited partners just to get to have a little bit more fun than they would have had in the India fund. Like, that's all. That's the only thing. But both of them have a thesis that bring really good returns because they're both focused on growth. India, and I'd say the final point I would make is what I'm not trying to do is own celebrities or own India. I want to own the toll roads between these places. So I want the toll road between India and the US. I want Indian entrepreneurs to come with us because they want to obliterate the US market. I want like folks to come into the celebrity fund because they want to be able to tie in with our celebrity funds and our celebrities in other countries. And then also the growth into places like India and other places as well. So everything should be attached. So 3 of them this year, and then probably 7 to 10 next year.
So you touched on this already, but let's talk to potential LPs or folks that are RIAs and managing money of high net worth individuals considering an investment in a venture fund. Why your funds and why now?
So I just think there's so many good funds out there. So I don't think it's even about 1 or 2 funds. I'll start from a slightly different place.
Sure.
Everybody should have a piece of their investment portfolio in alternative assets, period. If you don't have something in alternative assets, you are an idiot, right? And I mean in this area, you probably be very smart in the things that you're doing. You have to be in alternative assets. People these days who are saying things like Bitcoin is stupid, sure. But who's really stupid, right? Because we've seen the growth over 10, 12 years. And that doesn't mean you should put a lot in there or you should put anything in there, but you just need to be aware of these things. Venture capital has the highest potential of being able to give returns if done correctly. Now, doing it correctly is the caveat that sits in there. And you can't put all of your money in there because you can very easily lose all of your money in there. But you have to put a piece in there. If the only thing you're doing is throwing your money into the stock market and hoping that, the S&P is going to grow, it's a real tough growth. And I'm not even talking about like for folks like me who are in their 50s. I mean, for kids, like if you're coming through and you're planning out your portfolio going forward, you have to have it there. Venture capital is in the alternative asset space, but it's in a really interesting part because going back 20 years ago, when I think when Microsoft went public, they went public for a really low amount of money, but like really low. Today, companies are going public for like $1 billion. So actually, by going into the venture capital space, you're getting what used to be the public markets 15, 20 years ago. So I'm just saying, like, on a greater thing, like you should go into the public. You should just be in venture. Like, don't not be in venture. Everybody should be in venture. Like, whatever you go in for. If you're a kid and you're starting out, then throw some money into a WeFunder or a public. Like, learn it, small money. And then as you're growing and you're getting stronger, I would always say never do more than 10% of your net worth into it, but you should put money in. Number 2, anyone who thinks they can do this stuff alone is on hallucinating drugs. Like, it doesn't mean you can't be lucky. And it doesn't mean that you don't know somebody who did really well from a therapeutic company or something else. But the problem is you're playing a game that like you don't know the other players on the table. And the great companies, they're like companies sit in 3 classifications. You have the founders who have exited before, who are going to raise like a load of money, and they have a probability of being successful of like 5-10 times more than even great founders with a great product, because the VCs who won money from them before are going to put money back into them. So they already have a head start of $20 million, right? You're not going to get to touch those companies, like period. You're not in that game. And then you have the other startups who are the ones that are breaking through, but they're really, really, really good, but maybe they're not there. You're not even in that game, right? And then you have like this third group of people who are those founders, which is like, who the hell knows? It's a good person. It's a good product. It's a good whatever. It's a good country. It's a good hour of the day. Like, who knows? And that strategy is hope. And so I'm not saying don't play with it. I'm not saying don't be an angel. I know incredible people who are an angel. I'm just saying, like, if you don't try and do it with help, then you're doing it wrong. And then it comes to the part of who you choose. And I think that all comes down to like what thesis that you're comfortable with in that particular moment, where your risk is at that particular moment. Like, we're kind of risk adverse, but we think that the upside is good because we buy in at such a low price at the beginning and we get the option to do the warrants. So like selfishly, we feel that we don't need to be great at diligence. We just need to not be stupid, because we get, the company gets to be worth $300 million and we're investing at a $10 million, you know what I mean? Like, it's okay. Sure. But I think there's some incredible funds out there. There's some amazing funds like the Veteran Fund in San Diego. I need to introduce you to Mike, actually. Amazing fund. They have like some of the top 5-star generals who are sitting on their funds. And like the people who are investors are proud, not all proud veterans, but like tons of proud veterans who are there. If you're a veteran and you want to get in with an amazing fund and you want to do something that's very close to you, I would probably say, don't come with Brian. Like, I'll introduce you to Mike. Mike's a great guy. They have a super performing fund. They do really well. If you're in Silicon Valley and you've got a ton of money to put in and you want to go for like safety, then you know the top funds, they don't get the best returns, but an Andreessen is always going to return. You know, a Sequoia is always going to return. Maybe not SoftBank. But anyway, so hopefully that's helpful. Like, it is nuanced, and you need to be in this game. You need to know what you're doing. I knew nothing 10 years ago. I know an awful lot now. And then you should pick based on not a sales pitch, not a pitch deck, but based on the numbers that you're seeing the funds are doing with their internal rate of return and the deployments that these funds are making. And then also your own common sense at looking at how are they sourcing companies that are difficult to source rather than just everything.
Awesome. What are some final thoughts? Any final thoughts, pieces of advice, anything you want to share for everybody listening?
Man, I love this space. You know, I feel very privileged to be in this area. I know you do too. Like, we're like the Linda McCartneys of the Beatles and the Rolling Stones and everything. Like, we get to be around the greatest rock stars of today who are building like the most incredible things. Like, imagine being around an Elon Musk or, you know, a Steve Jobs or those guys. Like, that's what we get to do. And so people who believe in, and so a lot of what's happening right now, which I love, is like a reemergence of patriotism and of like, what are we proud of to be here in America? Like, what are the things that we should be grateful for to be here in America? And like, as that's happening, the one thing I know is without creativity, we're done for. Like, the thing that was killing us before was that we squeezed the life out of that creativity, and now it's back again. So you're an LP listening, whether you're a GP listening, whether you're a founder listening, we all have a duty to drive that innovation and support the great companies that are going to come through. And however, like, you all decide that you do it, you have a choice in that area, but you don't really have a choice in whether you do it or whether you don't do it. That's down to us to need to do. And if ever anybody wants to reach out, like, I'm Brian at Expert DOJO, super easy to catch. And but yeah, privileged, man.
Fantastic. Brian, thanks for being on the show today. And for those listening, definitely go check out what Brian's doing. He is all over social media. For some reason, he continues to post videos with his face on it. But I encourage you, you can mute the video and just listen to the wisdom. So, Brian, thanks for being on the show today.
Thank you, brother. I appreciate you.
Incredible perspective, I think, that he has
absolutely.
this about all the noise in the marketplace and, you know, just what it takes to really compete. I think he's got such a great view on that.
Well, he realizes that, you know, venture capital is a small piece of growing a successful startup. And for most companies, it shouldn't be a piece of growing a successful startup. And at the end of the day, he realizes that everything is about the customer. Make the customer happy, you grow your business, you become successful.
It's so interesting when you talked at the very beginning about like there's so much noise because it's so easy to start up, right? And I loved how he put it, everyone's so optimistic about the returns that they'll make. And I think that's exactly what's going on, for instance, in AI, right? But it's if you choose the right thing, if you really can make it work, if you put the work in. And that's not something that gets talked about as much.
Absolutely. It gets a lot of glamour. I think, a lot of the media focuses on the companies that raise capital. They don't focus a lot on the companies that grow a business. And obviously that's been the case for generations, decades. But, Brian is now carrying the torch of, okay, let's talk about growth. Let's talk about building a business. Let's let the headlines be about, I took my company and got to X amount of millions of dollars in revenue, not I just raised millions of dollars in capital.
It's so interesting because he was like, he loves companies that, inject greatness, as he put it, like, do that hard work in that middle piece there. And a lot of them, he was saying 70% work on the client, right? Like what the client wants, making something valuable for the client. And I totally agree with that because I've always been in this market proof first model of like making sure the market wants to buy what you have to sell it makes everything easier, including capital flow. But I had one of the most disappointing in all the times that I've ever pitched, most disappointing comments at one of his events. And it
Really?
was exactly on this. It was like, well, you have so much market proof and you have so many clients and you have all of this. Why do you need investment? And I was totally like devastated. Like, I did what you said. And then you're still asking me the other question. And it wasn't Brian, it was someone else there. But, still,
Right.
it's
Right.
like it is. Sometimes they want to see the flash and
Right.
sometimes they want the hard work. But Brian's point is the hard work is what really pays the returns.
Right. I did, one of my very first VC Fast Pitch events in Phoenix. Someone asked one of the investor panelists, how can I get a meeting with you? And he said, do something interesting. I'll find out about
There you go, right? I thought also it was really interesting that Brian said that he was still impressed by Y Combinator. And I thought I am still
it.
impressed with the
Sure.
companies that come out of there. So I think that that's really when you have someone who's really paying attention to what's going on in the venture capital world and isn't in their fun silo, which I find happens a lot. I don't know about
Right.
you.
Absolutely. I think, obviously he is smart enough to realize what works. And then you take a model that works and you find ways to improve it. You don't necessarily have to reinvent the wheel. And Brian realized, okay, Y Combinator has built a really good wheel. I'm going to put some extra air in the tires and make it even more successful.
Yeah. We meet up when you come on the West Coast at usually an Expert DOJO event, right? I mean, we've
Right.
we've met at other events, and I think they were involved in that very first VC Fast Pitch that I met you at City Summit. That was like, I don't know, like 8 years ago or
Many,
something.
many years
Many
ago.
years
That
ago, and
was,
I think he was on the panel or something. He was there for sure, and so you're going to be running more events with them, and you have in the past, and we're
yep,
going to have an emerging managers podcast event coming up and there might be
exactly.
some more in the future, so if you're
Well,
listening to this well
and then,
after.
obviously we've got one coming up. We'll be doing one in Manhattan, in early April, April 3rd. We'll have some of the guests from the podcast actually at the event, and we're going to do the same thing on June 19th at Expert Dojo in Santa Monica. So it's a really good opportunity to get to know these investors before the event through the podcast, and then get to meet them in person, at the event.
Yeah, absolutely. So because you may be listening to this at any point in time in the future or whatever, we will always have an updated list of events on emergingmanagerspodcast.com website so that you'll be able to find out where and what VC firm we're at and what location we're at with a opportunity to meet some of the guests, meet Scott, maybe meet me.
Absolutely.
I love that. Well, I'm sure you're going to have Brian back again because there's no way, I mean, with as many investments that run through there and everything that they're doing and working on, I'm very sure you'll have Brian McMahon back again.
I'm not going to break any news, but he has another fund that will be on the podcast soon. So
Awesome. Oh, I see. Little sneak peek. So you better stay tuned and subscribe. Well, Scott, I am looking forward to our next interview. You have come up with such a great, diverse group here, and Brian's just the tip of the iceberg.
Absolutely. And we're looking forward to even more.
Join Scott Kelly, Tracy Hazard, and their high-performing capital fund manager guests next week on the Emerging Managers Podcast. Don't miss our upcoming virtual and live VC Fast Pitch and podcast events. For more details, background on our guests, or an application to be our next guest, visit emergingmanagerspodcast.com. Don't miss out on shaping the future of venture capital and entrepreneurship with us by joining our robust community of innovators and investors today.